So in the lending space, there's what's called the 4 C's of lending. And the 4 C's of lending basically are the framework that all lenders use to determine whether or not to approve a loan for a borrower. Now, the 4 C's of lending are, first, capacity. So capacity refers to the borrower's ability to repay the loan. Primarily, the lenders are looking at factors like income, employment history, and then other debts. They're looking to see how much money that borrower is making, how much they're spending, and is that borrower going to be able to make that payment consistently and for the life of the loan. Next up, we have capital. So capital is the cash and the money that the borrower has on hand and in reserve. So this can be checking accounts, savings accounts, retirement accounts, and it could also potentially be cash, but it's really important to understand that any cash that you have in your house, physical cash, it has to be deposited in your bank account for 60 days in most cases before it can actually be used towards down payment, closing costs, or anything like that. It's called being vested. In addition, we have credit. So the borrower's credit score and history are going to be looked at here. And really, it just shows the borrower's track record for paying bills and other things on time. That's a big factor in one of the 4 C's. The final C is collateral. So this is the asset or the property that's being the borrower is willing to forfeit in the event that they can't repay the loan. So if you're getting a car loan, that would be the car, right? If you stop making your car payments, they will repossess the vehicle. But in the case of a house, if you stop making your mortgage payments, the bank is going to take your house, and that's called a foreclosure, which is a big factor behind the 2008 mortgage crisis. And so they've really amped up the laws and the rules surrounding these components to make sure that borrowers qualify and we don't have another 2008 incident. If you'd like to learn more about the 4 C's of credit or how someone goes about qualifying for a loan, I would love to help you out. Please just reach out. As always, low rates, high speed.